All right, what's up, everybody? How's everyone doing? Good, amazing. How'd your trading day go today, Inner World? I did. Truth be told, I scheduled it a few days ago, and I accidentally scheduled it for the time of our normal call, so apologies for that. But I feel about 1,000 pounds lighter, so that's always good. Everyone have a good trading day here today? Love to hear that, Andrew. It certainly looks like we caught probably one of the easier chunks of the day. Maybe not the easiest in hindsight, but looking at it, I think we did pretty well. Been a good little run of form here last couple weeks. Can't complain. So who wants to kick things off here? Who's got question numero uno? So, yeah, on my indicator, can you share your settings? Easiest way to do that, right, is go into the DTR website on the dtrtrading.com/chat or /DTR indicator, sorry, and then just click copy and save that layout setting in your own trading view. That'll make it so that your settings are the same. Now, the only thing that could then be different is if you have your session set as electronic trading hours versus regular trading hours. So I have mine set as regular, which means that opening range is calculated from the first candle of the US Open, not the first candle of the overnight open. So what I would challenge you, Andrew, right, if you really want to get disciplined into only going after A plus setups, is try to make that extremely clear in your mind over what that actually is, right? So if you know what you're looking for before you have to look for it, it's a lot easier to be able to classify an A setup versus a non-A setup. So for me, right, that would be strong candle shape, strong volume profile, and then, obviously a setup trigger. If you can close your eyes, right, when a setup is forming and you can see, hey, this is what a strong one would look like, this is what a weak one would look like, this is what a so-so would look like, then you put yourself in a much better situation to be able to basically play it out, right, when things actually happen. So instead of having to guess, you've already seen your strong version occur, and now you just have to execute it or sit away. Yeah, is the ORB based on the time frame that I'm on, or is it based on a general? No, each for me, each opening range is based on the time frame that I'm looking at. So if I were to cycle through, right, the 1 min opening range is the high and low of the first 1 min candle. The 2 min opening range is the high and low of the first 2 min candle, so on and so forth, right? So it can kind of go in perpetuity for however long you want to go. Now, if you start going, 4 hour, you're starting to maybe take the piss a little bit here. But all things considered, you have a pretty reasonable path forward. Hey, Ricky. What else we got here, team? So there's two things that can invalidate our confirmation standard. One, we get more volume than the confirmation volume, right? So if let's see if we can find an example here. So here, right? So let's pretend that we're looking for a bearish breakdown, and this was our volume standard. If the next volume bar was like this 1202, i.e., we got more bullish volume than the bearish volume, that would invalidate it. The second thing that would invalidate it, right, is if we close opposite, right, of our candle. So if I'm looking at a bullish confirmation or bearish confirmation, and then I get a candle like this 1044 that closes above the high of my bearish confirmation, that would invalidate my signal. And once my confirmation is invalidated, I need an entirely new setup before I can trade again. Yeah, so reversal setup, really basic. It's kind of a process or a stage thing, right? So you need to see a failed breakout through the opening range, and then a failed breakout through low of day or high of day. We'll go back to the reversal we traded on Thursday. That's a great example. So here, right, your initial failed breakout through the opening range at 945. Then kind of another attempt, and then at 10:06, right, it's a failed breakout through low of day. We're saying it's a failed breakout because it closes back up above the previous low of day. So you need to see a failed breakout through the opening range, and then a failed breakout through high of day or low of day, depending on which direction you're going for. And then you see a confirmation candle, right? So something in a bull case, green candle, increasing outlier volume. And ideally, if I'm visualizing that candle, it's an arrow pointing in the direction that I want to reverse, right? So if I'm looking at this candle, right, it's clearly an arrow pointing up. So that's a good confirmation. Whereas maybe something like this candle here at 1045, right, kind of looks like an arrow pointing down, not an arrow pointing up. So it wouldn't be a very good confirmation standard. So it's Failed breakout 1, failed breakout 2, strong candle shape, strong candle volume. Those are your 3 criteria. What else we got here, team? Anything else? Hey, Michael, can you review what validates and confirms the setup? Yeah, so it's just strong candle shape, increasing outlier volume, right? Yeah, you're thinking too much about it, Inner World Collective, right? This candle here at 10:06 clearly shows that this low of day was not a legitimate one, right? Because if it was, it wouldn't have instantly recovered above that line, right? So if bears here were actually strong, they wouldn't have closed back up above the previous close. They would have closed at 158, not 202. So you're overthinking it. So outlier volume, see this white line here on my volume bar, right? That white line is the moving average. It's the 20 period moving average. So outlier is anything above that white line, right? It's anything greater than average. There's a section on that in the course, right? On confirmation specifically, Miguel. Be worth taking a look at that here at some point when you have some time. So, but fundamentally, we're looking for a strong candle shape and a strong volume profile. Right? So we want both things to be telling us the same story. A strong candle a strong candle with weak volume is not worth our time. Strong volume with a weak candle is not worth our time. So we want both of those things to be telling us the same thing. Well, there's only one volume setting available, right? Or one EMA on the volume. Right? So it's just simple as that. Will it make a difference if it's the 20 SMA or the EMA? No, not really. What else we got here, team? Any other questions? What do we got? Oh, it's just when I had the paintbrush. Yeah, if you're interested in joining the team full time, we'll offer you that opportunity. Yeah, so I'm looking at three things on the daily time frame for my pre-market prep. Two of those things are in the past. One of those things is current day, right? So I'm looking at yesterday's volume, yesterday's candle, and then today's price action. So that gives me three things to look at, right? If I have a green candle yesterday with decreasing volume and then a gap down, only one of those three things is telling me the same story, right? For example, here today, we had a 2 out of 3 to the downside with volume. So that means we were looking at Friday's candle, Friday's volume, and then this morning's pre-market price action. So Friday's candle was red. Friday's volume was red and increasing, right? It's always going to be the same color as the candle. And then this morning was gapping up. So we had a 2 out of 3 to the downside. So 2 out of 3 things, excuse me, 2 out of 3 things were telling us that we had downside momentum, with the outlier, right? Or the one thing that was missing was today's price action. So 2 out of 3 to the downside with volume. So you're looking at three things, right? Previous day's candle and color, previous day's volume, this morning's price action or today's price action. We want all three of those things to tell us the same story. And if they aren't, what's missing? Again, there's a video on that goes into detail, 20 minutes on each possible scenario inside one of the courses. So I would recommend reviewing that. So NQ is an index, right? And what makes up the index are a bunch of individual tickers. So what we're trying to figure out, right, is how consistent the story is across the board so that we can judge how much, I don't know, confidence we should put into what the index is telling us, right? If we have a 3 for 3 to the upside, we've got trending markets here to the upside, but Apple, Tesla, Microsoft, Nvidia, AMD, Amazon, Facebook, Google are all trending to the downside, and they're telling us the complete opposite of what the index is telling us. Then we know that something somewhere is telling us a mismatching story, and that gives us reason to be cautious, right? If we have a consistent narrative across the board and we got the same story everywhere, then it's a little bit easier to believe the narrative that we're looking at. The other element here too, right, is why do we look at something like ES? Well, NQ and ES are extremely highly correlated. So if one moves in one direction, the other does as well. So we're just looking for those consistent stories. So we're trying to build up our context, right, on a daily basis so that we don't get too lost or too pot committed to a certain idea. And we can tell ourselves, okay, today's going to be choppy, or today is going to be more likely to be a trend day, or more likely to be a chop day, or more likely to be a reversal day, whatever it might be. We use the internals of what the stock market is showing us to build up that perception. As someone who has a problem chasing, what are some strategies you can impart that would help prevent that? What would you define as chasing? Let's make sure we have the same definition first. So let's make sure we're talking about the same thing first, and then in a world, I'll answer your question next. Okay, so you're basically just taking trades because you're addicted to PNL then, right? Or you're addicted to the idea of PNL. The reality here, Monkey Zombie, is that there is like you have to make a choice over what you want to be in the market, right? You can either be a trader or you can be a gambler. The gambler will hop into setups because they think that they're going to win without any evidence or indication that that's actually the case, which seems to be the path that you're on. The thing that I would look to answer, right, in that scenario is why, right? What's driving that behavior? Why do you think it's actually going to work this time when you probably have zero evidence long term that it actually does anything beneficial for your account? Why do you think that you can basically outsmart the market? What's driving that decision? Now, that's maybe an ego thing. Maybe that's a P&L thing. Maybe that's you're bored, right? Whatever it might be. But you need to answer what the driver of that equation is. For a lot of people, I think it happens because of boredom, right? You know, I only trade for 90 minutes a day, maybe 2 hours a day, right? And then I walk away. I don't stare at the markets all day and torture myself with potential. I go do something else and I go enjoy my life. You're saying that it's a problem because it's not actually leading to any beneficial trading results for you. So at what point is enough enough, right? At what point are you going to stop being insane? And like the literal definition of insanity is doing the same thing over and over and over again and expecting different results. So you already have a tremendous amount of evidence that it doesn't work. So why are you so committed to continually doing it when you've not proven to yourself that it actually is beneficial in any context? All right. But it honestly, guys, that shouldn't be difficult to hear, right? Like I'm telling you to stop doing losing behaviors. Like if that stings or if that hurts, then trading probably isn't for you because you like losing more than you like winning. And no offense, that's kind of pathetic. So you have to make it easy for yourself to follow your structure and to follow your rules. And you got to answer your why to know why you're making that decision, right? So why are you choosing to be a gambler instead of a trader? Why do you think that the easy win is more rewarding than the long-term win? And why do you keep doing something in the absence of evidence that it's actually working? So yes, I always look for a pullback prior to entering for two reasons. One, I want asymmetric risk reward upside basically in my decisions, right? So if I entered my trades at the second the next candle opened, it would be really hard for me to define my risk, or my stop loss would have to be pretty far away from where my entry is. And I would end up taking losses that are larger than I'd like to take. So the pullback allows me to find scenarios where I can get asymmetric upside, where, maybe I'll lose 8 points, but then on the next trade, I'll make 60 or 30 or 50 or whatever the number is. Instead of, okay, I just lost 25 points. Now I have to make back 30 or whatever the number is just to break even. That's not sustainable long term. The other element, right, is I like to see the other side of my trade fail before I click submit. So if I have if I can see, let's say if I'm bullish, right? If I'm bullish and I can see bears fail prior to my entry, then I have a lot more confidence that when I click submit, I'm going to be green right away, right? Or that the trade is going to move in my direction because all of those weak bears that attempted to beat back my move have just lost or they have just been defeated. So now I have a clear pathway forward and I have a runway where I can expect to be green right away. To go back on your earlier question, Inner Circle, what do I look for in a pullback? A pullback fundamentally, right? Then once I have identified my risk reward zones and I've seen that price action behave, like I've seen the other side of the trade fail, what I'm looking for then as it pulls into my entry zone is a moment of calm. Now, calm is a psychological attribute, right? Or a psychological trait in this context where I'm trying to do the opposite of chasing, right? So I'm trying to find the moment where I don't feel FOMO. I don't feel like if I don't click now, it's going to run without me, where mentally I am clear headed and deliberate in my decision. That way, right, I can avoid compounding psychological negatives inside my trading positions and I can focus on trading my position technically. So, how deliberately I enter my position or how deliberately I enter my trade is very much going to dictate how much stress, how anxious I am, how greedy I am, how much FOMO I have, right, when I'm actually in a position because I started off that decision in control. So the actual moment where I click submit, I'm not looking for it to be like, okay, it's got to pull back 3.5 points and stay there for 5 seconds and then I click submit. Like that's an impossible thing for me to track. Instead, I can track on, am I calm? Am I deliberate? And am I in control? And if I can say yes to those things, then accepting a loss becomes much easier. And when I'm in a winning position, it's much easier for me to manage that and have a clear head and basically psychology to maximize the P&L potential of that trade. Your reptile brain, monkey zombie, is not a profitable version of your trading, right? What feels best for you in the moment is rarely what's best for your account long term. And if you can't suppress that emotion or you can't suppress that feeling and you allow it to trick you into making a decision you don't want to make, you're fundamentally not in control over your trading decisions. And if you give away control to the market, you will lose. What else we got here, team? I'm sure there is. There's not one that I trade, right? Like I say this to people all the time. If I thought that I had an edge trading hours differently than I trade, I would do those things instead of doing these calls or coaching calls or whatever, right? So there's a million different setups that can work, a million different techniques that can work. It's your responsibility to go find different ones if that's what you want to trade. I cannot be responsible for that. Like I teach my strategy, my edge. I don't teach a million different ones. I show people what I do on a daily basis, and that's what people signed up for. If you want to take these concepts and apply them to different techniques or different markets, you're more than welcome to, but you have to do that research yourself. No one else is going to do it for you. So, good question, Mandy. Any book recommendations for mental growth as a trader or knowledge we should know as a trader? I think there's 2 books or maybe 3 books that I really like. So I would say Best Loser Wins is probably my favorite trading book. Like that's the one that's probably had the biggest impact on my career personally and aligns the closest with my philosophy on what I like to execute on a daily basis, right? I think being the best loser is ultimately how you become the best winner. Trading in the Zone, I think, is a pretty good book as well. Like it talks a lot about like various mental states that people will have in their trading and why they potentially happen. And it gives you a lot of good ideas over why your certain like hiccups occur as a trader. And then I love the book Thinking in Bets. It's not necessarily as much of a trading book, but it creates the idea or formalizes the idea of you're never going to be correct 100% of the time. But if you focus on making bets with asymmetric upside, which we try to do on a daily basis, you will win long term as long as you keep your risk management consistent. So I know this is a risk management question, but I'm starting to string together green days. When do you suggest I start ratcheting up the number of contracts? So far, I only use one. So for me, just because you're having green days, that isn't necessarily an indication that you're ready to increase your sizing. I would look to gamify it in a different way versus just a pure P&L thing. So I've talked about this concept a lot in the past, but I think it's really important to review your trading, right? So what's one thing I did well? What's one thing I can improve? What's one thing I can focus on for tomorrow? If you do that consistently, you're going to start to see the pattern of behaviors of the things that what's one thing I can focus on for tomorrow and what's one thing I can improve. You want to take the answers to both of those questions and start to test solutions to those things, right? So maybe it's something like, oh, I'm closing my trades as my P&L is decreasing, actually, when I want to be doing it as my P&L is increasing. Or, I'm risking one contract and I'm risking $200 a trade, but you know what? My average loss is actually $250. So now okay, I've got 2 things I want to work on, or I got 2 things that I want to improve. And then you focus on improving them. So then over your next week or 5 trading days or 10 trading days, however long you want to push it out, you judge yourself against those 2 metrics. Okay, on every trade I took this week, did I keep my loss under my, I don't know, I'm hiccuping so much. Did I keep my loss under my max loss number? Did I close all my winning trades as my P&L is increasing? If you can answer yes to those things after that 5-day, 10-day, 20-day period, whatever it is, you've proven to yourself that, yes, I can manage it. I can push myself now to increase my position sizing. Once you then increase from, say, 1 contract to 2 or 2 contracts to 3 or 3 to 4, whatever the number is, you restart that same test with those same variables, except now with 2 contracts. So with 2 contracts, is your max loss always less than $400? Are you closing all your wins as your P&L is increasing? Are you walking away when you're green for the day? Whatever you're choosing to judge yourself on, and using that to gamify increasing your sizing. If you have a slip up, then you go back down to 1 contract and you restart that process over and over and over again. Does that make sense, Roberto? Thinking in bets. Yeah, we're working on getting a trading view integration set up. Hopefully one of these days it'll be ready. That's unfortunately right now outside of my control. I'm waiting for trading view to basically approve everything. Like I will say this though, Theo, right? Trading views user experience, or like, it's UI, it's prettier for sure. But in my testing and from the feedback that people have given us about the prop firm specifically in Volumetrica, you will see way less slippage in Volumetrica. You'll get better fills, and the internal trade copier means you don't have to rely on third-party tools and extras. So realistically, buy and sell buttons exist everywhere you go. They don't really change. And I think it's better to have confident and consistent executions versus just a pretty screen to work with. So I don't use any prop firms in TradingView, Miguel. I run my own prop firm. If you want to use 60% off coupon, use the coupon code DTR members at daytraderfunding.com. We don't officially offer any support for any third-party trade copiers. That's not something that we can provide any official support on. But I'm sure if you Google that question, you'll find your answer, Kevin. Unofficially, the answer is yes, but we won't help you set that up or offer any support for that. If you're going to use third-party tools, you have to understand the risks of those decisions. And we simply cannot provide support to that because it's not something that we actually own, right? That's just a setting you can change, right? So, your volume, you want to switch it to, um, should be color based on close, right? So it's just a setting that you can change. Anything else, your team? Anything else? No. The price is the same on every time frame, right? So no, I don't change it. All I do in my execution window is input my variables, right? So where's my stop loss price going to be? Where's my entry target going to be? How many contracts am I buying? That's it. Nothing else. So like what you see me draw out on my screen here on TradingView, right? So if I do something like this and my reference price ends up being here, that's exactly what I'm typing into my order window. That's it. All right, guys. Final call for questions here. Final call for questions. Sounds good, Mandy, Miguel, and Roberto. Have yourselves a great rest of the evening. All right, guys. Well, if no further questions, I'm going to kill it here for the day. We'll do another one of these tomorrow. Same time tomorrow. We'll get back to our regular cadence. And I'll see you guys in the stream in the morning. Peace.